Hi everybody, welcome to another update on the stock screener. Today we are going to talk about a new gem that I found, and it's a gold mine. So gold has been going up and it looks like it's starting to break out, so we need to start buying more gold mines. And you can also see that oil has been weak and yeah, it has gone down. So that means that the costs for gold mines are going down. That's very good. So the margins will improve now. So the gold mine that I bought is Soma Gold. Just found out about it. And as you can see, it has done nothing for 2 years. It's hovered around 0.4. So now is actually a very good time because it's now starting to break out. Hit a new high of 0.47. So I think this is the time to buy it. And they have good news as well. So let's talk about the valuations. So this is a Colombian gold mine. I know it's high political risk to buy Colombian gold mines, but this one has been awarded an ESG award. Um, and it's also permitted for growth as well. So I don't see reason not to buy it, except maybe if they add more taxes in the future, that could hurt the company, but let's hope it doesn't. But look at the valuations here. So market cap is around 34 million, small cap. They do have quite a lot of debt, around 20 million debt, but that can be paid off really quickly. By mid next year, it will probably be paid off because they have plenty of net income, as you can see here. This is my estimate, 15 million net income, so PE of 2. Very cheap. Equity at 13 million if you count in all of the earnings that they will get up until now, which is April. So probably a price to book of around 3. 102 million shares. Here you can see the resources. Basically, Cordero is their flagship mine. It has about 250,000 ounces. And it's probably going to expand more because they find more resources than they mine. So production is around 35,000 right now. So that will probably give them around 6 years of mine life. 6 years of mine life, but they are going to expand the resources with more drilling. So I think they can go to at least above 10 years of mine life, and they say it themselves. Resource can be enhanced, more ounces will be added, and they're trying to expand the life of mine to over 20 years. So let's see if they can do that. The mine is very high grade, 8.4 grams per ton. So that's very good. And you can see it here as well. The grade has improved from 4 to 7. So as the grade improved, you can see that the ounces went up. So these are the production ounces, 1,500, and now it's 2,300 and growing. So they were able to increase it by 50%. So very good, improving production. So they went from 25,000 last year to now 35,000. And people don't know this yet. It doesn't come on the stock screeners yet. So this number, these earnings are still to come out, and then people will understand that this company is very cheap. So 35,000 right now at 60% capacity. So that means that they can go to 100 capacity, probably somewhere in 2024. So at 100% capacity, they will increase production another 30-40% from here to here. So this is not counted in yet. Higher production, lower costs, because it's the same mill, right? They just fill the mill up to capacity. So even with 35,000, the AISC is 890, which is a very cheap cost. So that's a double margin. We are now at 2,000 gold with 900 costs, so that's a double of the cost for the price. So this is actually a very profitable mine, and they are probably going to decrease the costs. So these are just estimates, but as you can see, if production rises, the cost will go down, and they are even able to expand to 75,000, as they say here, expanding capacity to 75,000 by 2025, but they need to find the resource, of course, because they don't have it yet. They only have the 300,000 ounces of gold. If they can expand it with new resources, then they could even go to 75,000, because they have the mills, they can expand it, and they can double the mill capacity with very low capex. Okay, so I took 750 AIC, could be another number, but it's just illustration. So as I said here, they have 500 tons per day this year at 60% capacity. That will go to 650 tons per day in 2024. Then they can double this in 2000, maybe 25, and that will give us 1,400 tons per day. And this is the maximum capacity. Is permitted, and this only costs $5 million to achieve this doubling of the mill. So now we have the valuations. So in 2023, this year, I just use these numbers. I even use an EBITDA multiple of 4 because they don't have that many resources yet. So, and also it's in Colombia. So I use a lower multiple with this AISC, with the gold price currently, and that gives me 150 million value. So that's this dot here, and this is the market cap. So already we have at least a triple from here. At least a triple just on current production. Now for next year, we increase production, decrease costs, and we go to 200. So that's using these numbers. So 200 valuation, currently only at 35 million US dollars. So that's an upside of sixfold. Let's say fivefold upside by end of next year. That's a good return. And if they find resources, then we have blue skies, and we will double the production from here to here. So this is the number if they can go to 75,000 by doubling the mills and reducing the cost even more. So that will give us 10x upside, possibly. So a lot of upsides. Here you can see the production growth. This was last year, and now we have this year up 50% production, right? And this has not been put in the share price yet. Shareholders or investors don't know yet about this number and how much net earnings this will give. So as this starts to come on the stock screeners, then people will start to buy it. Probably when the financials come out later this year. So I have estimated the net income. They say that free cash flow for this year will be around exceed 20 million Canadian. So I have tried to calculate this. Let's say we use the Q3 production. So this is the Q3 production annualized times 4. This is the 2023 production. This was the revenue in Q3, 12 million. We had gold price of 1750 in Q3, and today we have 1900. Actually 1950. Fixed costs is around 5 million per year. You can find this on the balance sheet. So this is the fixed cost. It's around 1 million per quarter. So without the share-based compensation added, it's about indeed 1 million times 4 is 5 million. They have also finance costs, 4 million per year because they have the debt. You can see that here, finance cost 1.2 times 4. So it's about 4 million in finance costs. So if we calculate the revenue, then this is the formula. B50 is the Q3 revenue divided by this number, gold price, times the new gold price, divided by Q3 production times 2023 production, and then times 4. And that will give us an estimate of the revenue this year, which is 85 million CAD. Operating income is probably 50% of that. As you can see here, cost of sales around half of it. If they have higher revenue, then probably cost of sales will be 50% with a higher gold price. So I took 50%. Free cash flow is operating minus fixed cost and minus finance cost. Yeah, this should be maybe 5 million CAD. So then we get around 30 million in free cash flow for this year in CAD. So net income with taxes, probably 40% tax, then we get the 20 million. So it works out, the numbers match. 20 million in free cash flow. Okay, so this is trading at 2 times free cash flow. That's a 50% free cash flow yield. I mean, that's a very good company to buy. And there is upside. So it's cheap, trading at 1 times EBITDA, 2 times free cash flow, and there's upside in production, exponential upside possible with very high margins because it's low cost, below 1000 AISC, with exponential growth undervalued. So I like this company. And if gold goes up, then there is even more upside. These were the latest Q3 numbers, and this is my estimate. So we should see a substantial increase in net income, around 20 million per year or 5 million per quarter. Okay, so that's basically it. Only worry is probably the debt. The debt is pretty high, but I guess they can pay it off by next year. And they don't need to pay it off right now. They have at least 2 years to do that. So looking good. And this is a long hold. Let's see how they do it. Let's see if they can achieve this production curve. And I'll see you in the next video. Bye.